Welcome back to the channel, ladies and gentlemen. Today I'm going to be talking about a stock that I've been watching for such a long time, and I'm very eager to see if I should enter the stock. So I did a breakdown of this stock. The stock is Roku. It is a very popular stock. What we're going to be looking at is a bullish case, we're going to be looking at a bearish case, and then we're going to take a more neutral approach. If you're watching this video today, you're probably considering whether you should buy the stock or sell the stock, so I think that you should stick around because we got a lot of information to digest. This video is for entertainment purposes only. If you enjoyed the video at the end, make sure to smash that like button. I'm doing the research for you, and that's all I ask in return.
Well, Roku, everyone asks, okay, there's a huge transition from linear TV to streaming TV, and what would you invest in, or where would you invest given the $70 billion of linear TV advertising dollars that are going to disappear and go somewhere? Where would you invest? Most people would say Facebook, Google. We would say a lot of people know that. That is no surprise. The surprise is Roku. Roku is becoming the operating system of streaming TV, of connected TVs. Roku put its own channel. It has started its own channel and is starting to buy content for it, Quibi. And Roku is moving internationally and is finding really good success. And I think that's an upside that many people don't anticipate.
So Cathie Woods is clearly very bullish on ROKU stock. In fact, it is the 4th largest holding in her ARK Invests funds. So she is definitely putting her money where her mouth is at. But what about bears? What do bears have to say about this? Let's take a look.
What do you tell people to do with this?
Well, just as a counterpoint, I think Oppenheimer also upgraded it today. So that tells you there's a lot of question marks about what's the right value for this company. I got out of it on Wednesday.
All right, Jim, you got out of it on Wednesday, and now the stock is at $318 per share. You got out of it at $123 per share. That was like less than 18 months ago. I bet you wish you had held. To give Jim some credit, he does go on to mention that he has been buying and selling ROKU stock. So let's see what else he has to say.
This was my 3rd round trip in it. Right now the stock is going down. You got to stay out of this because it is a momentum play, and the momentum is clearly to the downside. But this is a great company.
You sold it on Wednesday. I don't want to sort of gloss over that.
Yeah.
Why'd you sell it on Wednesday?
Because the momentum had clearly shifted to the downside, and this is a momentum stock like none I have ever seen. When it gets going on the upside, I'll probably be back in it again.
So the question that everyone wants to know is, Jim, did you get back into ROKU stock? Honestly, I love how candid Jim is. I love it. I guess that's why he's on CNBC.
When will that happen is the question. I don't think there's anything fundamental that's going to drive it higher until you get to earnings, which are 6 weeks away. Now, I did ask our producers to put up the chart from the last earnings call where it shows just how fast, there it is. Look at how fast these guys are growing, and everybody else is dead in the water. I mean, that is a fabulous business right now.
Jim, are you bullish or are you bearish, my man? You're on live TV. You got to pick one way or the other. It is very confusing.
You're playing a really tough game, my man. I mean,
but I've made money 3 times.
I know that. You have, but it doesn't get any easier from here. This game of
stay out of it.
Trying to get in, trying to get out, trying to get in, trying to get out. I'm just curious as to why you continue to wrestle with something like that. And
I'm not wrestling.
Or in the same,
I'm out. Well,
this is a highly volatile stock.
I have tweeted every time I get in and every time I get out. Every time.
Yeah.
So that if people watching me, you want to follow me on Twitter, that's where I'm telling you.
Yeah, this literally has to be one of the funniest interviews I've ever seen. Jim, you're going from bearish to bullish, and then you plug your Twitter account. What a classic stock tout.
And I come on here, and you know this. I'm integrity.
I'm not suggesting that you're not. I'm just simply saying it's a really difficult game you're playing.
It is. I'm out. Can I speak any more clearly about what you should do with the stock? I mean, I'm not fighting with you, Scott. I'm just trying to be crystal clear. I'm out of the stock.
But you're still looking for that chance. Well, you said it yourself. I'd get back in.
I watch a lot of stocks. We all should watch stocks.
Yeah, but you have a love affair with this one.
Because it's been great. It's been great.
Okay, Jim, we are now officially fully confused. We really still want to know, though, did you get back in? Because right now the stock is at $318 per share. So there are definitely multiple takes on Roku, and the company has been growing like crazy. It's been growing very well throughout lockdown and the quarantine. It was growing in 2019, and it's most definitely growing in 2021. So the question that you probably have and why you're here is, should you buy ROKU stock today? If you believe in Cathie Woods, then maybe you should buy the stock. Or if you're trying to take Jim's approach where you're constantly buying and selling and trying to time the market, that's going to be a much more difficult task. I think personally, Jim should have held the stock long. If he held the stock long, he would have held it around $123 per share. Today it is at $318 per share. So if you like the stock, just go long. The best thing to do with these high growth companies is just go long on the stock. Buy the stock now. It'll go up over time if you believe in the company and you think that it has high growth potential. Otherwise, if you have made money on the stock already, let's say you bought around 2019 or you owned it earlier and you've made 4x, 5x on your money, or you're up 20, 30%, who knows? If you're up on the stock and you want to take profits, there's nothing wrong with that either. Just know that you're playing that game that Jim's playing where you're buying and selling, getting in and out, and that's a much more difficult task to do. But before you do either of those things, let's take a look at what analysts have to say. All right, so I pulled up ROKU stock on Tip Ranks. This is a website that shows you what analysts think of the stock. And analysts are giving this stock a $480 price target. This is based on 20 analysts. And they're giving this a high forecast of 600 with a low forecast of 275. This represents a 50% increase from the current price of $318 per share. Okay, so what a turn of events. Literally in September of 2019, which was like 18 months ago, which is really not that long ago, analysts were saying that this stock is worth $60 per share. And now we're looking at a price target on the high end of 600, whereas the average current price is like 480 for these analysts. Meanwhile, the stock is at $318. And so the next question is, why is the stock at $318 per share, and why have analysts become extremely bullish on Roku? Okay, so I pulled up one of my favorite websites for financial news. It is Morningstar. And here we have a look at the short interest on Roku. Basically, how many people are bearish and shorting the stock. So as you can see from about a year ago, the shares short change is down 12%. That's a really big deal. So basically all the shorts have gone away from Roku. There's not a lot of short interest. The short percentage of float is only 2%. That's very low. In fact, that's basically people are saying, I don't want to be Jim anymore. I don't want to be selling this company short. I don't want to be getting crushed by Roku as it continues to go up and up. And it also is a pretty bullish sign on the stock. Now we're going to take a look at their key ratios, which basically is going to be like their financial sheet. So taking a look at their revenues have gone from 320 in 2015 all the way to 1.8 billion in 2020. The company has grown revenues 6 times in 5 years. If they continue this pace, which obviously it's going to slow down at some point, but let's just say they grow another 6 times in the next 5 years, then they're looking at 12 billion or so in revenue in 2025. And that is a huge amount of revenue. Considering their market cap is something like 40 billion, I'm going to take a look at that, then this is a company that has a lot of upside because they're growing revenue so rapidly. So taking a look at their shares, they have been issuing shares of the stock because they want to take advantage of the higher share price. What that means is they're selling more shares to the public in order to use that money to be spent on the business. And you can see that here with the capital spending, right? So they spent 85 million on growing the business, and they spent 82 million on growing the business. So they're really focused on growing the business, and it's starting to pay off, and it's really being shown with these revenues. And as Jim said, I mean, he showed the chart. He literally said, look at how well this stock is doing. Look, it's crushing all its competitors. And Cathie Woods is clearly very bullish on the stock. The analysts are very bullish on the stock. So perhaps you, myself, maybe we should be bullish on the stock. Honestly, full disclosure, I don't own any Roku shares, but the stock was trading way back up in like 450 or so, and now it's down to 318. So the stock is a little bit down since I first started recording this video. But looking at the stock chart, Roku hit a high of $465 per share, and now it is trading at $314 per share. I mean, so that means that the stock has dropped 33%. The stock has dropped 33% recently. So just realize, if you're looking to enter the position, the best time to buy it is when others are panicking, and especially after a major dip like this. I mean, this is a 33% drop. So I actually am not against buying some Roku shares. I mean, the stock was all the way at $465 per share. It is currently trading at a $40 billion market cap. Again, they're on track to continue to grow revenue at a very rapid pace. If you have been shorting the stock, buying puts, congratulations. If you have made money and you want to get out and you're up like 15%, or maybe you got in like around here and you're up, 50%, I understand you wanting to take profits. Maybe you're worried, maybe you're scared, maybe the stock is technically overvalued. I mean, I know that the stock has had a significant run up, and it benefited greatly from coronavirus and the quarantine. At the end of the day, I think that once you cut the cord, there's a high probability that you're not going to go back.
Cord cutting is a powerful long-term theme, and that's what we call a secular trend. Okay, they're cyclical and they're secular, meaning it doesn't need the economy to do well. People were dumping their cable subscriptions for web-based video services long before the pandemic. In other words, COVID's not giving these companies a temporary boost. See, they were already headed in the right direction. The virus simply stepped on the accelerator. The cord cutters aren't going to go back once they get vaccinated.
So if you believe Roku is a good stock to own in the long run, then this could be a good opportunity to enter the stock.